This is Nightly Business Report with Tyler Matheson and Sue Herrera.
It's become clear to me that this prolonged leadership turmoil would do irreparable harm to the institution. So this morning I informed my colleagues that I would resign from the speakership and resign from Congress at the end of October.
Speaker splits. House Speaker John Boehner steps down. What does his departure mean for the potential government shutdown, Wall Street uncertainty, and even interest rates?
The hack stops here. China and the U.S. agree not to commit cyber thefts against each other, but President Obama wants actions more than words.
And clearing the air, Volkswagen announces a corporate overhaul. While here, government regulators tighten testing standards in the wake of the automaker's emissions scandal. All that and more tonight on Nightly Business Report for Friday, September 25th.
Good evening, everyone, and welcome. Bombshell news on Capitol Hill today. Speaker of the House John Boehner announcing his resignation just days ahead of a potential government shutdown at the end of September. So what does it all mean? Eamon Javers takes a look at the implications.
This morning I woke up and I said my prayers, as I always do, and I decided, today's the day I'm going to do this.
The announcement caught Republicans on Capitol Hill by surprise, even though tensions had been building in their conference for months. Evidence of that tension in the Republican Party, the exuberant reaction by conservatives at the Values Voter Summit in Washington.
Just a few minutes ago, Speaker Boehner announced that he will be resigning.
Some of the most conservative members of Congress cheered the decision in their own way.
He is not the man to lead the Republican Party into 2016, and I think it's a great day. Finally, we can hopefully elect a speaker that actually can not only believe in, but articulate conservative principles.
At the White House, President Obama offered some praise for the ousted leader as a deal maker, the very thing that frustrated conservative Republicans about him.
He is somebody who has been gracious, and I think maybe most importantly, he's somebody who understands that in government, in governance, you don't get 100% of what you want, but you have to work with people who you disagree with, sometimes strongly, in order to do the people's business.
The early betting is Boehner's resignation makes it easier to cut a deal next week and avoid a government shutdown. But over the long term, whoever inherits Boehner's speakership is likely to be in more of a mood to fight than to cut a deal. For Nightly Business Report, I'm Eamon Javers in Washington.
So does John Boehner's resignation today bring more uncertainty or clarity to Wall Street? Greg Valliere is Chief Political Strategist at Potomac Research Group, and Michael Farr is President of Farr, Miller and Washington. They both join us tonight. Good evening, gentlemen. Greg, I'm going to start with you, if I could. Specifically, what does Mr. Boehner's resignation mean for Wall Street, and also the prospect, as Wall Street is watching very closely, of a possible government shutdown?
It doesn't mean a lot, Sue, for a shutdown next week. I think we'll get a deal on that. The big story is December. I think in mid-December we could see a crisis over spending levels, over the debt ceiling. And for Wall Street, what that means is that the Fed, the FOMC, is going to have a meeting the next week after their deadline of December 11th for the budget. So how can Janet Yellen raise rates if we have a government shutdown?
Michael, do you agree with that?
I do, and I've got to tell you, Greg Valliere is my must-read. I read Greg's notes every morning. He's my go-to guy. So I think what this means, a couple of things. Even with the Fed to do something, it wasn't a shift in policy. They were going to remain accommodative. So this was going to be a nominal thing. I think the Fed put is gone. So if markets become a little bit shaky, I don't think the Fed rushes back in. I think that they're out. But I don't think there's any chance they raise policy here. I think Yellen said as much yesterday and told markets that should something else happen, this is that something else.
So, Greg, what's the next step in your book? I mean, obviously, we need to get a new speaker, and that in and of itself can create uncertainty depending on who that person is.
Yes, I think it's probably going to be Kevin McCarthy. He's the odds-on favorite right now, Sue. He's going to have to listen to the right wing. He's going to have to be much more restrictive on any kind of new spending. He's not going to be able to deal with Nancy Pelosi as John Boehner did, and that's a big story for the healthcare sector. I think people who look at lab stocks, health stocks that might have gotten a little increase at the end of the year, I'm not sure anybody's going to get a spending increase at the end of the year.
So, Michael, did I hear you just say that you do not think there will be a rate hike this year because the turmoil in Washington will be so intense as we head into that debt ceiling fight?
That's exactly what I said, Tyler. I think that this shift, without Speaker Boehner there, is a clear shift to the right, and therefore that partisanship that was so acerbic in the past year or a year and a half ago comes back. And I think Greg Valliere has been dead on as he's been analyzing all of this. So healthcare becomes the question, and you're going to start looking at some of those stocks. Sue's question was clarity and uncertainty. I think we have more clarity and more uncertainty. I think we got both with this resignation.
What are you going to be watching for most, Greg, as you know, signals on Capitol Hill often tell you what is going to come next? What signals are you watching for?
Two things, Sue. Number one, what will McCarthy say over the next few days? Will he sound conciliatory or will he sound confrontational? Number two, let's watch the Highway Trust Fund. It has to be replenished in late October. If it's done fairly simply and there's money for it, that would be a good sign going into December. If we can't even get the Highway Trust Fund done in late October, that would not be a good sign.
Michael, what's the implication for equities given the political landscape that you and Greg outline here?
Well, I think that the risk trade is off. I think that all of a sudden the notion that if markets really fall that the Fed's going to step in and start buying more bonds or throwing more cash, that's out of here. So you really do need to know what you own. You have to pay attention to the balance sheets and why you own it. I think the things that I'm going to watch for, though, Greg's looking for Kevin McCarthy and the Highway Trust Fund. I'm going to be looking at the price of gold. I'm going to be looking at the dollar, and I'm going to be looking at interest rates, particularly on the 10-year Treasury.
You're nodding your head in agreement, Greg.
I think interest rates stay pretty darn low. Market rates, aren't going up very far. There's too much uncertainty. No. There's more fiscal restraint coming. To me, that points to a low interest rate scenario.
Well, and remarkable that Yellen and the Fed seem to expect that we won't reach their 2% inflation target until sometime in 2018. I mean, that was a stunning piece of data.
Yep.
All right, gentlemen, thank you very much. That was Greg Valliere with Potomac Research Group and Michael Farr with Farr, Miller, and Washington. Well, from Congress to the presidential race, where wage control and taxes will be wage growth, I should say, and taxes will be a focal point for the American public. Republican presidential hopeful Jeb Bush sat down with John Harwood and talked about those very things.
Wage growth has been flat for a long time in our country. We have this big challenge that we have to fix. Growth by itself isn't going to create higher wages, but higher growth will create more wage growth than no growth. And if you do it in the right way, where you're putting money in people's pockets, which I think is important, you can create economic activity.
Given the trend toward income inequality, which you have been concerned about, given the concern within your party about debt and deficits, why would you take the risk of a policy that confers a huge proportion of its gains in the immediate sense on people at the top of the income scale? And if it doesn't have the growth effects you're talking about, would substantially increase the deficit.
The broad tax policy that we're proposing does the opposite of what you're suggesting, which is it provides tax relief for the middle class. Everybody freaks out about the deficit. I mean, I worry about the deficit, the structural deficit for sure. But if we grow our economy at a faster rate, the dynamic nature of tax policy will kick in.
What does eliminating the estate tax, how does that help anybody's right to rise?
Well, it means that a family won't lose their business. We're not.
But these are people, that tax only applies to people who have made it big time. They've risen.
Well, they're dead.
Yeah, well, they're heirs. Yeah, right.
Hopefully they're up there. What we've suggested is that a family asset doesn't get taken away. That allows for second-generation businesses to continue to flourish. I mean, when I campaign, there are a lot of people, maybe it's just because of my campaign, I don't know, but I don't see a lot of big corporation guys hanging out in the political process. I do see a whole lot of family-owned businesses that are creating a lot of vitality in communities. And having a onerous tax code, creates problems. Yeah, we have an exemption, but there's people have earned this through good fortune and a lot of hard work and taking risks, and I don't think you should take that away from families.
Well, if you want to watch the rest of John's interview with Jeb Bush, log on to our website. It's called nbr.com.
It was a mixed day on Wall Street. Stocks were higher for most of the day, but the biotech sector had its worst day in nearly a year and a half, and that dragged everybody lower. The Dow stayed above water thanks to a 9% jump in Nike following the earnings numbers that we told you about last night. In the end, the Dow Jones Industrial Average rose 113 points, the Nasdaq fell about 48, and the S&P 500 was off just a fraction. For the week, all three indices were lower, but the Nasdaq was the biggest loser. It was down about 3%.
Well, while the drama of Speaker Boehner's resignation was playing out on Capitol Hill, Chinese President Xi Jinping and President Obama held high-level meetings at the White House today to discuss cybersecurity and a number of issues of contention between the two countries. Michelle Caruso-Cabrera has more from the White House.
The leaders of the world's two largest economies announced an agreement on environmental goals, with China, the world's largest polluter, agreeing to a cap-and-trade program to reduce carbon emissions. The two presidents also claiming progress on cyber espionage, with an agreement that neither government will conduct or knowingly support cyber-enabled theft of intellectual property and trade secrets. But even President Obama sounded uncertain about whether the Chinese would follow through.
What I've said to President Xi and what I'd say to the American people is, the question now is, are words followed by actions? And we will be watching carefully to make an assessment as to whether progress has been made in this area.
President Xi was greeted on the South Lawn with the most senior members of President Obama's cabinet on hand to receive him. While Xi and Obama went on to meetings in the Oval Office and the Cabinet Room, the two First Ladies, Michelle Obama and Peng Liyuan, went to visit the Chinese pandas living at the National Zoo.
President Xi, could we expect prosecution?
Some moments of drama at the joint press conference when the Chinese president took questions from two American reporters, one on cybersecurity and another on the economy. He answered both of them, repeating what he said at a speech in Seattle on Tuesday night.
China strongly opposes and combats the theft of commercial secrets and other kinds of hacking attacks.
Still, the moment was significant. His predecessor, Hu Jintao, back in 2011, ignored an American reporter's question about human rights, then pretended that he was having technical issues and couldn't hear, before finally giving an awkward answer. No such awkwardness today, even though cybersecurity is clearly a tense issue. Just last week, President Obama raised the possibility of sanctions in retaliation for alleged Chinese military hacking. Today, President Obama said that has to stop. For a Nightly Business Report, Michelle Caruso-Cabrera at the White House.
And in Germany, Volkswagen is making changes following the emissions scandal that has embroiled that company. And here, government regulators are tightening the screws when it comes to testing vehicles as a direct result of that scandal. Hampton Pearson has all the details.
Volkswagen, in hopes of clearing the air after it was caught cheating on diesel emissions tests in the U.S., today announced plans for a corporate overhaul. It named Matthias Muller, the head of its Porsche division, as its new CEO. Meanwhile, Michael Horn will remain CEO of the Volkswagen Group in America. Members of the supervisory board pledged to do everything possible to win back the public trust in the wake of the emissions scandal.
The test manipulations on diesel engines for Volkswagen mean a moral and political disaster. The non-compliant actions of developers and engineers in development shocked Volkswagen as it did the general public.
VW has admitted installing so-called defeat devices on Volkswagen and Audi cars with four-cylinder diesel engines on some 11 million cars worldwide, including about 500,000 vehicles in the U.S. Late Friday, the Justice Department announced its own investigation. Meanwhile, the Environmental Protection Agency is sending letters to all auto manufacturers outlining major changes to the way it tests for diesel emissions.
We're putting vehicle manufacturers on notice that our testing is now going to include additional evaluation and tests designed to look for potential defeat devices.
The EPA says VW could face $18 billion in fines. And attorneys general for more than 24 states are launching their own investigation ahead of what could be an avalanche of class action lawsuits. For Nightly Business Report, I'm Hampton Pearson in Washington.
Coming up, this week's Market Monitor says if you are looking for growth, it's time to get into the game. He'll explain. At the United Nations, Pope Francis addressed the world, calling on leaders to take concrete steps to protect the environment, presenting it as a human rights issue. He also made an emotional visit to Ground Zero, where he asked for prayers of peace. Mary Thompson has more.
On his day-and-a-half trip to New York City, Pope Francis visiting hallowed ground.
You can feel the pain here. It's palpable.
At an interfaith service at the 9/11 Memorial Museum, the Pope appealing for peace, echoing remarks made earlier at the United Nations.
War is the negation of all rights, and it's a dramatic assault on the environment.
The environment, the focus of Francis's speech to the General Assembly, framing the protection of the earth as a human rights issue. The Pope saying the misuse of natural resources harming the marginalized the most, who become what he calls a byproduct of the culture of waste.
They are cast off by a society, forced to live off what is discarded, and suffer unjustly from the consequences of the abuse of the environment.
Francis also asking for restraint in response to financial crises, saying harsh terms, but on developing economies' debt hurts rather than helps them. He also asked for aid in dealing with the migrant crisis. In his 40 hours in New York City, Francis traveled 57 miles.
From Ground Zero, he went north to a Catholic school in East Harlem, then through Central Park in a motorcade on his way to Madison Square Garden, where he'll say Mass for 20,000.
A brief visit marked by words and memories made for a lifetime. In New York City, I'm Mary Thompson for Nightly Business Report.
A product announcement and disappointing quarterlies from BlackBerry, and that's where we begin tonight's market focus. The smartphone maker reporting an adjusted loss as it is still trying to turn its business around. The company also announcing it will launch a new Android phone to help its device business. Shares tumbled over 7.5%. They finished at $6.49. Shares of Finish Line plunged after the athletic apparel retailer reported that profit fell in its most recent quarter. On top of that, sales missed analyst estimates as higher overhead expenses weighed on the top line there. The company did see same-store sales rise, though. Still, the stock slid nearly 20% on the day to $19.91.
Google is reportedly under antitrust scrutiny in the U.S. Regulators are investigating whether the search giant is using its Android mobile operating system to stifle competition. Shares fell just over 2% to $640.15. Japan Tobacco is in advanced talks to buy $5 billion in assets from Reynolds American. That report, according to Bloomberg. Japan Tobacco owns cigarette brands like Winston and Camel. Shares rose 2% to $42.99. And a recall to tell you about. Sanderson Farms is recalling more than 500,000 pounds of chicken that may have been contaminated with metal. That's according to the U.S. Department of Agriculture. Despite the news, the shares of Sanderson Farms slightly higher to $69.37.
And now to our market monitor, who has stock picks he thinks could rise 20% over the next 12 months. Last time he was on with us in April, he recommended Apple. Since then, it is down 12%. IMAX down 13%, and Tesla, which is 17% higher. He's Ross Gerber, CEO and president of his own wealth management firm, Gerber Kawasaki. Ross, welcome back. Good to have you with us. Do you still like Apple, IMAX, both of them down, and Tesla 17% higher?
Absolutely. Absolutely. Apple more than ever. I mean, they're just killing it today with iPhone sales, and we expect so much good stuff through the Christmas season. And IMAX is still waiting for the global release of Star Wars, which is the premise here. So the stocks have gone down a little bit for now, but I think it's a great opportunity. And Tesla, we love.
Facebook you like as well. And we just heard from the CEO the other day, virtual reality.
We love it. We think virtual reality has so much potential, and Facebook has built an amazing platform with the original Facebook, obviously, but also with Instagram and with WhatsApp. And now with virtual reality growing like crazy, we think this is a great opportunity to own a blue chip of the future.
It's selling in the 90s now. Where do you see it in a year's time?
Well, we see it moving higher, ideally about 20% over the next year. But of course, with all investments, there's risk, and we'll see how it goes.
All right, T-Mobile, I'm not sure whether we want to focus on the stock or the CEO, who is colorful, I guess is the best word to describe him.
I love John. I think he's doing a phenomenal job. He's not scared to take on the industry that's well entrenched.
He definitely isn't.
He's honest, and he tells you as he sees it. But one of the things we have to consider, he's incredibly smart, and he's doing a great job taking customers from everybody else. And T-Mobile's growing and is growing really well.
All of the carriers are getting away from not giving away, but subsidizing phone prices.
Right.
Is this the new model, and is it going to work not just for T-Mobile, who was among the first to get away from it and get away from the contracts?
It is working, and it's great for consumers. It's great for the phone companies because they don't have to come up with all the money up front.
Right.
And it's great for Apple and the device makers as well, because I just upgraded my Apple phone, and it's only been a year, and now I'm able to do it. So it's almost like you're leasing a phone now instead of buying one. So it's a win-win for everybody involved. And T-Mobile was really the firm that got that all started.
Let me turn you to Washington. With Mr. Boehner's resignation, we had a discussion earlier in the program about how that plays out in terms of a possible government shutdown, whether it affects the Fed. Does a fundamental news story like that affect your investment strategy at all, Ross? How much attention do you pay to it?
Unfortunately, I think the biggest thing holding the markets back and the economy is Washington, and the resignation of John Boehner is definitely not a positive, I don't think, for the Republicans. He was a steady hand in a very unsteady boat that they're in. But I'm really scared about the political future for this country if we don't get some real candidates running for office here that are real good.
We led by saying you got to get into the game if you want growth, and your game pick here is Activision Blizzard. Why Blizzard?
I love the video game business, and I've been involved with it on and off for a long time. But what's happening now with technology is the digital download business has increased margins hugely, and mobile gaming has increased the ability for the companies to sell their games on so many different devices now at many different price points. And Activision has key franchises as we go into the Christmas season. We expect them to do very well, but also their margins are expanding. And some of their new games like Destiny are just taking off like crazy. So we love the business, and it's also going to have a big, big potential with virtual reality.
All right, Ross, thanks very much. Have a great weekend. Ross Gerber with Gerber Kawasaki.
Well, speaking of gaming, did you know that watching people play video games is turning into a big business? May sound crazy, but the numbers are staggering, and major companies are taking notice and action. Next.
Apple's latest iPhone 6S and 6S Plus went on sale in 12 countries today, and as expected, customers across the globe lined up to get their hands on the newest iGadgets. The Pope didn't pick up one today.
Not yet.
Not yet. Maybe he's going to get one. Last week, the tech giant said new smartphones are on pace to top last year's record of 10 million phones sold in an opening weekend. Analysts expect up to 13 million this weekend.
Esports, or competitive video game playing, may not be physically grueling like traditional sports, but it is competitive and it is big business. Julia Borston looks at the booming business of watching people play video games.
Over 110 million people around the world are esports fans, regularly watching competitive video gaming. And now the business is going to prime time. Turner and agency WME IMG are teaming up to create a new esports league, broadcasting 20 Friday night telecasts on TBS every year. And video game giant Activision Blizzard announced a new global esports league for its mega hit Call of Duty. The league will have a pro and amateur division and a $3 million prize pool, as the game maker looks to cash in on the activity around its games after it sells them.
You think about the size of the number of people like Call of Duty, 40 million people are playing and watching that game on an annual basis. Potentially you can deliver an audience size of a similar size and caliber to what Thursday Night Football is. And then obviously there's a lot of monetization there.
As video games continue to grow in popularity and live streaming capability improves, along with access to live stream games from mobile devices, the popularity of esports is exploding. And so far, the two main companies that have profited from the trend are YouTube and live streaming game app Twitch, which Amazon bought for nearly $1 billion last year. A range of traditional sports companies have moved into esports. Last week, DraftKings announced it's bringing fantasy sports to video game contests, starting with a world championship for League of Legends in Paris next week. And ESPN has aired various esports competitions, though ratings haven't been as massive as expected based on the huge audience for esports. That's because until now, esports have been greatly fragmented.
The risk is, again, that you produce the content poorly. I think the obvious trend of people wanting to play skill-based video games and other people wanting to watch them play is very clear. Now the next step we have to get to is we need companies to be able to create the content that's very attractive for everybody to watch in a television format.
Now analyst Wilson, along with the media giants, are optimistic that consolidating the business into a few major leagues will create major ratings. For Nightly Business Report, I'm Julia Borston in San Francisco.
And finally tonight, they say a picture's worth 1,000 words. Well, the people in this picture are worth a whole lot more, and we're not talking words. Estimated the executives surrounding Chinese Premier Xi at a business forum in Seattle Wednesday represent firms with a combined $2.5 trillion in market value. Front row big one. Facebook's Zuckerberg, Chambers of Cisco, Alibaba's Ma, IBM chief Ginni Rometty, Apple's Cook, and Amazon's Bezos. That is $2 trillion alone. Front row seats.
That's a class picture for you.
Yeah.
That does it for Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
Have a great weekend, everybody. Enjoy it. We'll see you on Monday.